Trading should pay for your vacations, not your rent. Today, we're jumping straight into an explainer that completely breaks down the reality of what it actually takes to protect your mind, your capital, and your future as a trader.
Now, I know your very first reaction to that statement might be a little bit of disappointment. You're probably thinking, wait a minute, I want to quit my job entirely, not just take a trip to Cabo. But listen, this isn't a downgrade of your dreams. It's actually the exact opposite. Treating your trading profits as a supplement rather than a survival necessity is literally the only way your edge can actually compound without causing total psychological destruction. Because the absolute second your profits have to pay for your basic survival, you completely change the way you interact with the market. So let's dive into Section 1, the survival income trap, and the myth versus the reality. Look, it is completely normal to want to escape the 9-to-5 grind. We all get that. But we really have to contrast the social media illusion with the brutal reality here. Marketers are constantly trying to sell you this fantasy of waking up, tapping a few buttons on your laptop on a beach, and having permanent freedom. But the reality? Manually trading for your rent money is actually far more stressful than a regular job. You're dealing with intense screen time and absolutely crushing existential anxiety the minute you hit a normal drawdown. It all boils down to security. Think about it. In a normal job, even if you make a mistake or have a slow week, your paycheck is still going to clear. You have a safety net. But when you depend entirely on a trading account, you are always just one bad week or one totally unpredictable market event away from a financial crisis. If your rent relies on your trading performance, a bad day literally means you might not eat. Which brings us right into Section 2, why scared money always loses, and the psychology of pressure. This right here is the step-by-step death spiral. It happens when a completely normal, statistically expected drawdown collides head-on with your real-world bills. Look, every system has losing streaks, right? But if you hit a 2-week drawdown right when rent is due, you panic. You start tweaking your system, you ignore your own rules, you force trades, and boom, you blow the account. You didn't lose because your system was bad. You lost because you couldn't afford to let the statistics play out. This is the exact definition of scared money, and it forces you to completely abandon logic. When you're trading with capital that you desperately need for life, it turns a statistically sound strategy into a gambling habit fueled by pure fear. You stop looking at the charts objectively, and you just start trading based on how much money you need to make by Friday. And that desperation, it pushes retail traders into making some terrible technical choices. They drop down into these highly volatile timeframes, like the 1-minute or 5-minute charts, just praying for a quick win. Now, on a 1-hour or 4-hour chart, the volatility risk is manageable. You can reach target safely. But on a 1-minute chart, the risk is extreme. A single news spike can rip right past your stop loss, cause massive slippage, and completely ruin the account. Scared money basically forces you into these toxic environments just to chase a fast buck. Let's move on to Section 3, the consistency illusion and the actual math of drawdowns. Real consistency in trading looks nothing like what you see on Instagram. It means fully understanding and accepting that losing months are going to happen. You are going to have trades that win and trades that lose. You will inevitably have flat periods where your account just hovers at zero growth for weeks on end. Consistency is not doubling your account in 2 days, and there is no such thing as permanent green screens. There is simply no holy grail system out there that just prints money on command without ever dipping into the red. So, I really want you to ask yourself this question right now. What happens to your psychology and your life if your system goes into a totally normal, statistically sound 2-month flat period, but trading is your only source of income? Seriously, how are you paying rent? How are you buying groceries? The sheer stress of that reality will shatter your discipline long before the market ever has a chance to recover. This brings us to a massive paradigm shift in Section 4, the multi-pillar framework, and how to build your armor. If you genuinely want to survive in the markets long term, you have to treat your other income streams as the armor that protects your trading psychology. By reframing your trading as just one slice of your overall financial pie, sitting right alongside your main job, your investments, or side projects, you completely eliminate the pressure. If your trading account has a bad month, it literally doesn't matter because your other pillars are keeping the lights on. This is what allows your edge to execute flawlessly. Plus, we have to talk about realistic expectations. A calm, professional annual return is usually somewhere between 10 and 20%. To actually live off a 10% return, you would need a massive amount of capital. Most folks just don't have that when they're starting out, which proves exactly why this supplemental mindset is totally required. You cannot squeeze a full-time living out of a small account without taking reckless account-blowing risks.
So, how should you actually view your profits? You treat them as the extras in life. At first, maybe a good month just covers a grocery run. Awesome. Then, as your account grows, it pays for a flight. Eventually, it funds a really incredible vacation. And ultimately, it just acts as a vehicle to stack onto your long-term investments. When you treat the money this way, you remain totally emotionally detached. You just let the compound interest do all the heavy lifting in the background, completely stress-free.
All right, Section 5, Scaling Without the Stress. This is the right way to grow once your armor is in place.
As you start to scale up, you're going to realize pretty quickly that manual trading makes you the emotional bottleneck. It demands constant screen time and causes massive emotional fatigue. But transitioning over to algorithmic trading and a portfolio approach, that makes a ton of sense. You set up pre-configured rules, you backtest them thoroughly, and then you just let the systems run. It removes you from the immediate, painful, emotional sting of every single tick on the chart. And there's a foundational rule to scaling that you've probably heard a million times. Don't put all your eggs in one basket. But let's add the crucial second part. Don't put all your eggs in at the same time. This is your ultimate risk management philosophy right here. Diversify across different assets, different strategies, and different entry times. You literally never want to risk your entire bankroll on a single trade or a single moment in the market. Now, instead of risking your own hard-earned savings, the smartest traders are leveraging multi-stage capital programs and prop firms. You start with a tiny account, maybe $500. You prove your consistency over time without any pressure of financial ruin. And as you prove your edge, you unlock larger and larger funded accounts. This lets you scale up your exposure safely while keeping your own personal risk practically at zero.
So, the golden question, when can you actually quit that job you hate? To be brutally honest with you, you shouldn't even consider dropping your main gig until your other income pillars vastly outweigh it. A fantastic rule of thumb is this. You are only ready to make that leap when your investments, your side projects, and your trading combined are pulling in double the salary of the job you want to leave. That is the safety net required to trade with a perfectly clear mind.
Listen, the market is absolutely ruthless to desperation. So ask yourself, are you going to keep chasing this social media fantasy, or are you ready to build the financial armor that actually guarantees your longevity? Because the undeniable truth is this. The traders who survive 5 years are the ones who never needed trading